Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. Thanks for joining me today. We have Cycles TV. We have another episode of analyzing cycles in the global markets. Thanks for joining me. We are live. I will spend some time on your questions in the chat. So what's on the agenda for today? We must revisit the global markets. For sure, to be honest, there's no real surprise outside if you stick to the cycle analysis. So I will update you on the global markets, the S&P 500, the US indices. And as promised in our last session, I told you we should have a look at oil energy cycles, or you requested to have a look at oil cycles. So I will update you on the status on these cycles. That's it for today. 20 minutes cycle analysis and then some discussion, up to you what you want to discuss here today. So let's start with the global markets. So for sure, to be aware of, this is an education channel. We do cycle analysis based on signal processing. So we are interested in analyzing global market cycles to learn how cycle detection works. As mentioned, this is not any projection or trading service, so you need to make your own decisions based on much more knowledge than just cycles. So how do these cycles look like in the global markets? It's not scripted, so I'm doing this live here together with you. First of all, let's switch to first chart. I want to share where we are coming from in May. Or before going on to the daily cycle, you should be aware of that the global picture for the main markets has switched since October to December last year from the long-term cycles into the bearish, the negative cycle phase right now. So since December, we are in a long-term down cycle phase, which lasts into next year. That's important to be aware of. And we have seen that during the first phase, when the daily and the long-term cycle have aligned, that this phase induced very heavy downwards movement. So since the April period, the daily cycle has switched to the upside, which we discussed here during the period from April to May. And in May, you can review these sessions here on the channel. I recommended, or I told you that we might now see these classical bounce back from the drop we have seen, which might be limited in the period of June. So where are we? Exactly in the mid of June, and what happens? The cycle reversed. So this was as expected, and let's now take some lessons out of this behavior. So therefore, we will now open our cycle charts, and let's start in the period of May, where I often showed here on the channel, like what is seen here, that the daily cycle with a length of 163 days bottomed, at this point in time. And from the projection, the upswing projection, to move into a period of July. And I always said we need to be careful in the beginning of, or in the month of June, where this cycle might change. And I remember there are some questions out of the community. Why July? Why June? Why not July? Because the absolute top here, if you just have a look at this as a cycle top here, is for sure in July. But I always told you we need to be careful here somewhere. Yeah, this is where we are today in June. And the reason why is that in the context of the longer term cycle, which is still pointing down during this full period, once we arrive, somewhere here in this cycle, the threshold of the up move slows down. So this is the classical, or this is the overall window where you could expect a top just without any additional knowledge. So for sure, to fine tune the exact top here in this period, you need additional information from larger cycles, smaller cycles, technical analysis, and all the other kind of analysis. But this period here where you need to start to be on alert again, and that's why I always told you here in this area, in June, and this is exactly where this window started, in June, there might be the possibility that the daily cycle rolls over into the bearish camp again. And then this is in alignment with the longer term weekly cycle. So therefore, I always told you, look out for a possible change in June. So we are here now. So and I will update you in a second. We have seen this up move somewhere here. So this is what happened. And now we are currently dropping down again. The second important point why I said here in May that you need to look out for June, this is the midpoint here of the cycle. So the midpoint is also starting beginning of June. So and the window starts somewhere here of this cycle. So there are two reasons why I always told you in May that you need to be careful once June arrives. First, often cycle failures start at the midpoint of the projected cycle. This is beginning of June. Second, the window where this top might happen is also mid-June here. So that's always what we had in mind already from the past, and that was always the reason I told you, look out for the period in June when the bearish cycles align and the daily is now in alignment with the longer term weekly cycle. And the force, the downward force, we have learned already in the first quarter of this year that the weekly cycle has a very strong move to the downside. Okay, so that's just repeating what I told you here on this channel, if you are a long-term follower here. So now let's update this analysis in a second to what happened. And you see here, just zooming in here, the light blue has not been seen at this point in time, but we have seen the bounce here from the time of the analysis. I mean, it was more sideways moves, but this is what I also told you. This just resulted in this sideways move here. And then at the midpoint of the cycle, so by last week, that's exactly here, cycle fails, and now here this window starts, and we go down. So that's what I said in the beginning. It's happening outside what is expected from a cycle's perspective, just to show you what I've written also in a free article here. Let me just go back here to this window here that you can see it. So this was an article I put out on 7th May. You see here the date. So this is a free public article I put out here, and you see in the lower right corner. Suggest watching for the point around June when the next phase alignment occurs and the long and short-term cycles start pointing down in sync once more. It will be at this point where the downward wave will get its next boost, written beginning of May. So that's always the beauty of cycle analysis. You are aware of, from a timing perspective, what to be expected. So by beginning of May, I told you anyhow that upward projections are limited based on the longer downward cycle here. And we have now seen the sideways move and mid-June. Down we go. So from the daily perspective, let's just update the chart now to the current data. So therefore, I will take into account all data. Let's reset the analysis. So let's see what to expect. I mean, there's not really some new facts out there here. We have a first quick look into the spectrum. So the cycle moved into the cycle length of 170. We are aware of that the cycle length 160, 170 is the dominant cycle for still longer term here. And at this point, there's no update here. So it's just that we are yeah, at this point where this daily cycle suggests that we are at low, but we know from the midpoint projection from past projections of this cycle have been broken. So it has not rolled over, so that this cyclic phase here now looks more that the uptrend has already ended, and we will skip this phase here due to the strong downward move here. So in that case, we must also switch to the longer term period, so the weekly chart here, which is then this chart here. And we know from the long-term weekly projection and the cycle with the length of 186 weeks is exactly the cycle we have shown here by end of last year. So there's no change in the overall long-term cycle with a length of 186 weeks. I have shown you this cycle here since November last year, again and again, and you see how beautiful price is. Yeah, since October, November, that's when I first highlighted this cycle here. Price snaps now really to this cycle line here. It's always frightened how cycles can act like prices running on rails on this longer term cycle. And that's what I also told you. This is just the beginning here. So we are now just in the beginning. What we see here as the peaks around this cycle, this is the daily cycle, which might work its way downwards into the next year, which is not a beautiful outlook anyway, but that's what cycles tell us here. So due to the strong force of this cycle downwards here, I would, and that's what I said in May, look out for the points in time when the daily cycle and the weekly cycle always realigns its phase to the negative phase, which started mid-June as projected by May. So, and don't try to bet against the long-term cycle. These are the two takeaways. So there's no change in cycle projection. We can just now observe how beautiful this cycle projection worked out. And now daily, weekly cycles are in sync now, moving downwards in the market. From a technical perspective, it might be choppy for the next 2 to 3 weeks into the period of July. So as the next 2 to 3 weeks are the second half of this daily cycle, where it might still uppoint. But anyhow, the outlook for July will even get more worse if we take this into account. So last but not least, let's give you just an update how this also looks on the technical chart. I think I made a snapshot somewhere. So let's switch here, and yeah, this is now the next level. Once you have these cycles analyzed and have on your chart, you need to add technical indicators to fine-tune the situation. And I will just quickly review some information here. So the upper cycle here, this is the short-term cycle averaging between 130, 170. Don't be irritated. This is the cycle with a nominal length of 160. And we have the long-term weekly cycle here with 186 weeks, yeah, which was active since October here, also shown here since October, which has just shown us that we are just in this downward move here. They are just put on top of each other. So, and now down below you see two classical technical indicators, which just give you additional information on the possible timing information. As I've shown you, the cycles just give you a window of opportunity. And then the technical analysis can give you the exact timing point. So the top alignment really took place in the period by the end of the year, as the RSI, so the relative strength tuned by the dominant cycle, signaled here based on divergence. And you see here down below just as top on the RSI. So let me just clean up the chat for a second here. What's going on here? I just need to clean up the chat here. We have some. Okay. Okay, so I just needed to clean up the chat. Sorry for that. Yeah, I just want to, what I want to highlight is, so we saw the possible bottom here in the period of early May, yeah, where even the technical indicators signaled here the possible entry. So this was exactly where both indicators signaled the entry. And what happened now, end of last week, I've just shown this here, that the first, and that's the cyclic momentum indicator here, turned negative. So we have a divergence between these indicators here. So at least this has stopped the bullish technical pattern here. And this happened exactly at the point in time of the midpoint of this cycle here. So I just want to repeat it, even if it might sound strange. If you see that the technical situation is not in alignment or gets out of sync with the cycle projection at the midpoint of a cycle projection, that's exactly an indication when this cycle projection should not be followed anymore. And exactly that this happened last week at this point in time here, where the momentum indicator gave a negative signal while the RSI indicator was still positive. And now we had the conflicting indicator situation exactly at the midpoint of the cycle projection. So this is how you read the cycles and how you fine-tune your readings. And as we have been on alert anyhow, due to the strong long-term downward cycle, this is exactly what I've told you in May. Watch out for this to happen somewhere in June, because that's now, and this happened end of last week, beginning this week. The cycles now have been aligned daily, weekly into the next bearish cycle synchronization. So therefore, and review all these videos which you will find on this channel here. You can even go back into October, November and see how this pattern was visible all the time. And that's why I think it's important you get also some information how now to combine technical analysis, daily, weekly cycles. What are the indication when cycle analysis fails? That's the purpose of this channel, by the way. And I want to use live market data for this purpose. And not cherry picking whatever from the past. Okay, that's the global markets. So sorry for, depends on in which camp you are, not the possible a beautiful outlook here. Let's now switch to oil and also have an update on oil cycles now for a second. So therefore we need to switch our charts. Let's start with the long-term analysis on oil now. So therefore the long-term chart on the oil futures is shown here. We are still peaking or peaking very dramatically since November last year. We are in this up move here, or since April 2020. We are in the strong up move here. So the question is, do we expect this uptrend in oil prices now to stop based on cycles or not? So that's the general question. I've included some more data here, but we see cyclic behavior in this data set. So it looks promising to have some cyclic views here. So this is the spectrum view on the oil cycles, and there are two dominant cycles which could be used for cycle analysis. The first one has lengths of 182 weeks in this case. These are weeks. And the second one has a length of 142 weeks. So these are the two peaks I would use. Just for information and for the learning purpose here, these peaks, which you see here and here, should not be used for several reasons. First, we see a very flat or a plateau-like formation here. which means there's no real trust if you have this flat plateau where a peak is maybe here or here to the right or left. We don't know it. So this is a very strong and clear peak here, while we have the plateau forming on the right. That's the first reason not to use them. And second, you see the size of the triangle is very small, compared to the size of the triangle shown here. So the size of the triangle gives you an indication about the strength of this cycle, and the higher the strength, the better. And that's the reason I would skip these two ones here. You could then argue maybe the next ones to look at are these two cycles here at these given length here, but I would always start with the more important ones. So that's the reason. Let's pick these two cycles for our analysis. So just a short wrap up why we choose these cycles. So we go up to our list. The first one has a length of 142 weeks. We need to cross-validate if past movements in this data are in sync with the markets, and maybe let's also add the second cycle to our composite here. So this was with 182 weeks. I've just added these two cycles here on top of each other. Let's do a quick visual inspection of this cycle. So we have the cycle top here, the price top here. We then have the cycle bottom here, real price here. So let's connect just the price. I mean, this is a perfect top here. So then we have the low here, then the top formation here, and maybe somewhere it's here. That's the low. Maybe here to this top, it's more sideways. Then here we have the low. Here is the high. So we see just from connecting the real price tops and bottoms with the cyclic projections here that we are now due or overdue. So we are exactly in this topping window here. So from this point of view, we are clearly in the window to expect that oil price should reverse and move down. And from the timing perspective, we are talking about the next expected window here in away mid of next year. So mid of 2023, we might see another bottom in oil prices, but for sure before we need to see prices to turn now in the oil futures. So that's the weekly long-term perspective. I would be careful with the daily view in a second, but that's the projection now here. We have very good correlation of past bottoms and tops based on these two cycles here. So which gives us confidence that oil prices are maybe in the ending phase of the current environment. We see why it's the final peak here. Okay, so that's just the view on oil. The reason why I'm not using the daily cycles is because the environment for oil on the daily time frame, from a digital signal point of view, I would say there's too much noise in the energy markets. But that's arguing from an engineering point. I mean, the news outside, you know why energy is now shooting to the moon. From a digital signal processing point of view, it's just a very short amount of time since February this year, while the markets go crazy outside, and that's from the perspective of analyzing 20 years of oil prices. It's just noise. Don't get me wrong, it's not about rating what's happening outside, just judging the situation from the point of digital signal processing. Therefore, we should not take the last 3 months of daily data or price behavior into account, because the signal to noise ratio is too low. And maybe that's also a kind of lessons learned. when you should use data sets. So you need to have a high signal to noise ratio. So if there's a lot of news, a lot of one-time events taking place, then the signal to noise ratio for cycle analysis is too low. That's the case on a daily time frame for oil. But that's not the case if you use weekly data series, even going back a much, much more longer period. But I just want to explain why I'm not using daily cycles now to give you any kind of update on oil, because I think it's not worth it anyhow, because of the signal to noise ratio, which is too low for energy prices on the daily time frame since February. Too much noise in the data set based on one-time events. Okay, so that's just the point I want to make. So let me take your questions into account. First, Glenn, you had the question, there's the question about how are these cycles projected? So we are using digital signal processing where we push the data into. So we do some detrending with the data, we do some data preparation, but then we use special techniques of digital signal processing. We apply Fourier analysis or a variance of Fourier analysis, which then give you this so-called spectrum, which I've shown you, which then tells us which are the active cycles in the data set. That's the technique we use, at least here in the Weekly Cycles TV. I mean, in the foundation, we use different approaches to analyze cycles. It's not only digital signal processing. There are more ways to approach cycles on, for example, financial markets. Therefore, my colleagues and our financial summit and our science summit deals for sure with different techniques. And I also would recommend you to watch and listen to my colleagues here on the channel, or once we plan these seminars and summits on cycle analysis. But what we're doing here, once a week, digital signal processing, analyzing cycles. The cycle scanner, what you're seeing on screen, is the tool set which is available to every member. We're a non-profit organization, to every member of the foundation. So what I'm doing here can be redone by you as a member of the foundation. Glenn, I hope this helps you. So Christian, is the topping bottoming window of a cycle roughly 1/3 of its cycle length? Yes, at least it's the correct assumption. I don't know if it's 1/3, but what you're referring to, and let's also put this onto the chart. So these areas here where the cycle turns, this is the area, or this is the window where the bottom or top could take place without any additional information. So therefore, you can exactly see this window here. It's not a mathematical approach here, but you need to take into account that what we're seeing here on the chart are theoretical cycles based on sine waves modeled into a composite, which is then just put on top of the chart. In reality, these cycles are not as theoretical cycles. So therefore, the real top will be more to the left or more to the right, but in this range here where you see this topping formation here. And you can also see the more cycles you put into a mix of a composite, for example, here, the window is not as clear or not as sharp, as maybe at this one here. So where there's a very sharp window, which, by the way, that's exactly also what happened in the market. So we had a very sharp move in the markets, and this is exactly what was projected also, at least to see a sharp window here, while you see here the projected windows are more flat. And that's exactly also what happened in the market. So we don't have these sharp peaks here. So here we have another sharp move, exactly what happened in the markets. So that's an indication where to expect the top or the bottom, Christian. So you're right, the cycles give us a window where these points in time are. And then to drill down, we need to add more cycles. So we should also switch to the next lower time frame. So we should analyze then hourly charts. So if we come from the weekly, we go to the daily, which gives us the window in the S&P. I told the window will come in June. And then you can move to the hourly chart when you can then add cycles, and you see then if it will be more to the left or to the right, plus technical analysis, because price then also follows the technical pattern. And then you can also from the technical analysis see if it's more on the left or the right. But the pure cycles give you this kind of window. That's correct. Dale, is it possible for us to draw on our charts? Not in the basic edition, to be honest. I'm just drawing on the browser. So what you're seeing here, I use a layer of the Google Chrome browser, which allows me then to draw on the browser, not on the chart. We have a more advanced charting version, which also allows to draw, but it gets more and more complex. So we need to be careful not adding too much complexity, because the purpose is make cycle analysis easy. The more and more features we might add, then we get into the area where charting application shines, but this is not a charting application. So there's always a trade-off, make cycle analysis easy and not getting into the area of complex charting applications. But for sure, Dale, it is a point. It's always good to being able to draw. We need to cross-check on our roadmap moving forward how we want to prioritize this topic moving forward. But I will keep an eye on it. So thanks for recognizing that there seems to be the need to draw on chart. Eric, your question. Can we derive from the strength in the weekly and daily analysis whether the weekly or the daily cycle is the stronger cycle? So that's a very good question. Thanks for asking that or bringing this to the topic here. So their first answer is, from the pure cycle analysis, we don't know which cycle will be stronger, because the pure cycle analysis will not give us this information. But there are ways now to judge the strengths. One way is, or let's get back into October, November last year, because that's the point where the weekly cycle rolled over for the first time. And at this point in time, we have not known, or we have not been aware of the downward move of the longer term weekly cycle will be a strong down move, or maybe the cycle would even have led the global markets into a sideways move, and then the daily cycles are there. But after the first quarter, we have clearly learned that the weekly cycle has a strong downward movement. And in the period of April, May, we learned that the daily upwards cycle just caused the markets to move sideways, which means from this market behavior now for the first quarter or first half of this year, we can conclude that the strength of the longer weekly cycle is much, much more higher than the daily cycle. So even therefore, any upward projection on our daily cycle charts will not overrule the strength of the weekly downward cycle until mid of next year. So, Eric, I think that's a way to answer your questions. There are then different techniques where you can try to conclude also on the strength of these cycles. But I think for now, let's take these two answers. You can't get it from the pure cycle analysis. If you observe the behavior of these cycles into the current market environment, you can then draw a conclusion which cycle is stronger. But we can't foresee that if the cycle has not rolled over into this direction. Christian, is there a technique we can use to do cycle analysis on a smaller time frame? like 400 to 250 bars? Yes and no. So the first answer, let's start with the no. If you just use 250 or 400 daily bars, your analysis will be limited to the possible length of cycles which could be detected in this small data set. So let's assume you only use 200 daily bars. The possible or the maximum length you could detect is limited by the factor of you need to multiply the length of the longest possible cycle by 3, and then that's the amount of data you need to take into account. So if you divide 200 by 3, I think you are getting into a length of 60 to 70, 65, let's say 65 days. So the maximum length of a possible cycle is limited to 65 days if you want to analyze that. So you're not able to detect longer cycles than 65 if you use 200 days of data from these. So therefore, I would not recommend to use less than 700 to 800 daily bars, or that's about 3 years of daily data. Don't use less than 3 years of daily data being able to detect daily cycles. If you just limit your maximum, that you say, okay, I don't want to detect cycles longer than 50 or 60, then you can do this, but you are limited to the possible cycles which could be detected. And keep in mind that a cycle with the length of 50 or 60, which is the maximum which would you be able to detect, rolls over every 25 to 30 days. So every month the cycle phase switches. This is anyhow a very short-term cycle if you're interested in this period. So therefore, that's the no part of the answer. The yes part of the answer is now you can for sure use just 200 days of past data and do a detailed analysis, but you need to switch to the next lower time frame. So in that case, you need to go from daily data sets to 2-hour, 4-hour, or 1-hour charts, being able then to analyze the cycles on hourly or 2-hour charts. That's possible, but then you need a different data set. So you cannot do this on daily data. You need to break down the 200 days you're interested in a 2-hour chart, which you can upload. So what you need to do, and that's exactly what I'm doing, you need then to bring in your own intraday data, because we, from a foundation, we don't provide intraday data sets as we are not a market data provider. But if you have access to intraday 1-hour, 2-hour charts from your charting provider, you can download this charting data and upload this into the cycle scanner, and then you will be able to do this. I just need to clean up now the bots here, getting back into our check set section. So hopefully this bot will go back again. So that's the answer to your question, Christian. Hope this helps, or at least gives you a kind of direction to follow up. Next question. Are there alternatives to Yahoo Finance to get stock price data? What is the abbreviation? For sure, there are different alternatives. The point I want to make here is that you need to bring in your data, and the simplest way is upload your own data so that you can get the data from wherever you want. The second answer is, and we get this request very often, so the question is absolutely right, but we as a foundation, we don't want to become a data provider. So we are very careful in opening access to different data sets, because then we approach a different way of how the foundation works, and we don't want to resell or rebuild daily data. So what we allow is access, for example, to Quandl datasets. I think Quandl was acquired by Nasdaq, by the way, so we need to see how this changed. But if you have access to Quandl or have a Quandl account, you can still access Quandl data. You can also, a second important source is Crypto Compare. So if you are interested in crypto datasets, you can use the ID, which is the same on Crypto Compare. The abbreviation is CDS. So with the abbreviation CDS, you can open Crypto Compare dataset. And finally, you can also load data from the FRED source, the Federal Reserve Bank of St. Louis, which has also open source data for a lot of datasets. You can also use this in our cycle analyzer. Then there is more documentation on that. So if you drop a note for our service at Liz or Bill, our service colleagues, they will guide you with more information where you can read up how to use that. Next question. It's a while since I've last attended a market cycles report. Can I ask what is that oscillator I see at the right bottom of the platform? The two-color one. I think you're referring to the one down below here. So what's this oscillator? That's a different way to look at the composites you have selected. So this indicator depends. Just a second here. This indicator depends on the cycles you have selected here. So you see it changes depending on the cycles you select for the composites. So the cycle energy depends on the different cycles you have selected. And it shows you the direction, so the momentum or the force, the direction in which all these cycles push. So the reading is more interesting from this indicator which is plotted here. And you should look out for the situations where you have strong momentum in each direction. So for example, here in this area, or in this period from 2024, the momentum to the upside and also to the downside is very limited. So there is not much cyclic influence into the market, while here in this period, so from now into next year, you have a very strong force of the cyclic components on the markets here. So right now, we would expect there's a quite heavy influence of the cycle in the markets, while then moving forward. So these two cycles, you could ignore them starting November next year. Anyhow, we need to re-update this analysis. And this is just for explanation. So don't take these cycles into account. What I just told or showed here is just for explanation, because I choose these 6 cycles here for this composite, which even might make anyhow no sense, but it's just to explain the indicator here. So look for the indicator. The composite cycle energy gives you an additional indication if this composite should impact the market or not. And look out for strong amplitude swings. Then these timing points are for your interest. If you just see this flattening curve, you might have the turns from a timeline, but you see that the energy going up or down or switching from up to down is so low that this will even not impact the underlying price. That's the purpose of this indicator. I hope this helps. Next question. Have you ever backtested whether the data from, say, 2016 to 18 projected cycle that correlates well with the actual market movement in the year following? Yes, sure. We're doing this for 20 years, just not mathematically, not a backtesting in regards to sell the top, buy the low. And the reason not doing this mathematically is you need always to take into account the longer term and shorter term cycles and the technical situations. So cycles per se are not a trading system alone and will fail alone. So if you just trade cycles, you will not be successful based on the simplistic view I show here. If you set cycles or the timing window into context, longer term, short term, technical analysis, then you can define a very successful trading system. And that's the purpose of this channel here, as detecting a cycle is more or less simple these days, but to judge the cycle in regards, can I trust this cycle? The context you need is, to set a cycle into, the technical analysis to fine-tune the top and entry. That's the knowledge we all need, and we can learn from each other. So therefore, I would not recommend to use a single cycle, because this backtest will fail. So to give you a simple answer just to one cycle. Okay, so thanks. Yeah, I think in general, we are running now for 45 minutes, spending a lot of time on your questions, but thanks for your questions, bringing that in. That's what I like. That's the reason I'm live here. And I hope you got some points which bring your individual knowledge on cycles forward. That's the purpose. So please don't take this session as market projection sessions. We are here to discuss the current market environment because that's more stimulating than old data, but we want to learn from a cycles perspective. So, like this channel, subscribe to the channel, feel free to comment down below, and I would like to see you again next week, Monday, same time, same place. Have a nice week. See you next week. Bye.